Today we're going to start off with a panel of the exchanges. And if you know the old expression that, the buck stops here, well, in this particular case, the buck starts here. So for most of the companies that exist in the microcap market, they're either listed on one of these exchanges or two of these exchanges, and some of them could even be three of them. So although they are separate organizations and separate companies, they are very friendly to one another, which is kind of typical of what goes on in the microcap market with companies and bankers and service providers working together. So I'd like to start out by introducing them, let them introduce each other, or introduce each of themselves, and then we'll go from there. So Brady, take it.
Sure. Brady Fletcher. As I mentioned, I run the TSX Venture Exchange in Canada. One of the unique things about the TMX group is we own both the TSX and the TSX Venture, which enables us to facilitate capital formation for venture stage companies earlier in their life cycle. And as they grow and mature, we either dual list them down on NASDAQ, like we did with Kronos recently, or we graduate them up to the TSX, which is a globally competitive senior exchange. Over the last 16 years, we've had 680 companies that have done that, graduated from venture up to TSX. And last year we raised $6.1 billion for the 1,654 listed companies we have.
Joe Oltmanns, OTC Markets Group in New York. Thanks again, Shelly, for inviting us to be here today.
My pleasure.
So in simple terms, our market, if a company does not trade on the New York Stock Exchange or on NASDAQ in the US, it trades on our market. We're very diverse. We trade 10,000 companies overall on our market. We trade a lot of large ADRs like Heineken, Roche, and Adidas. Over 300 community banks trade on our market. There are about 400 now cross listings from the TSX and the CSE alone on our market. But I think why we're here today, I think, is to discuss more of the small cap market and how we're helping companies narrow the gap on the exchanges.
Rob.
Hi, I'm Rob Cook. I'm with the Canadian Securities Exchange, also known as the CSE, sometimes called the Cannabis Stock Exchange, because we have quite a few of those on our exchange. We've got 350 companies, 60 of them are in the cannabis sector. So business has been booming. We've been growing at a very fast rate for the past couple of years. We were only launched as a stock exchange in 2004, and at the time we had only a handful of companies listed. So now we've got about 350 companies. Last year, say on average, we had about 300 or so, and collectively they raised $1 billion. Our mission as an exchange is to reduce the cost of capital for emerging growth companies, and I won't let you know any more about that now, but we'll have a table in the exhibit hall and some materials out there if you want to learn more. I have a question for you, Shelly.
Go ahead.
Public, private, etc. Are we in etc.?
You could be.
Yeah, okay.
We're going to start out with the first question, and I'm going to throw it out to all of you independently. What criteria should issuers use when choosing their place of listing? Now, that means a U.S. company looking to list in Canada or a Canadian company looking to list in Canada and the U.S. So let's start with Rob on the end.
Okay. Well, being a Canadian exchange, I guess I should tell you should list with us first. There's actually some very good reasons for that. It does tend to be cheaper to go public and list in Canada. Also, several U.S. companies can Canadianize themselves when they go public in Canada, and that will make them exempt from a lot of the SEC filing requirements. They can actually qualify as what's called a foreign private issuer, which reduces the filing requirements for them. And so we recommend that if the company is going public, they consider Canada, they consider the CSE, and then they can access the U.S. investor community by getting a quotation on the OTCQB or the QX. So there's, the two major considerations, of course, are cost and access to capital. And those things do require a bit of investigation, particularly when it comes to access to capital. But it's definitely available to growing companies in Canada.
Let me throw it to Brady next. Same question.
Yeah. Absolutely. Rob hit the nail on the head for a number of reasons here. The idea of listing in Canada and Canadianizing a company does provide an ability to grow on our public markets. And our average financing size is under $5 million. So that is something that is much more in line with what you'd traditionally see for a Series A or Series B VC round down in the US. That being said, if you list up in Canada, you don't have to deal with any of the protectionist term sheets that come from the traditional venture capitalists. There's no liquidity provisions that are associated to that, no valuation hammers. You're not giving up board representation. That entrepreneur gets to maintain optionality as they grow the business. For us, it's actually really exciting because if we can get companies listed on the venture, they go from venture to TSX, and we have a program called the MJDS, or Multi-Jurisdictional Disclosure System. And if you've been listed on the TSX or the TSX Venture for 12 months, the US regulators actually rely on your existing public disclosure to fast track you down to NASDAQ or the New York Stock Exchange. So that's part of that whole ecosystem of fostering the growth of these companies earlier on, facilitating that capital formation in a stepwise function where it's less dilutive to an entrepreneur, and we're able to grow them. I think one of the big considerations for entrepreneurs, though, is you have to be public market ready. If you're walking around with a PowerPoint or you're just kind of formulating that business plan, it's going to be very difficult for you to engage with the investor audience. And that's why we have listing standards on the venture exchange that we try to make sure companies are institutionally relevant or relevant to the broader retail system. Most of our listing requirements are tailored to an arm's length financing. So if a company is able to raise sufficient capital from third parties, then we're here to work with them and get them up and get them listed and provide them that capital formation platform for raising subsequent rounds of capital. 2/3 of our companies actually raise 3 or more rounds of capital, which is 100 times that of what happens in the private space. So it's actually a pretty effective platform here.
Now, Joe, I want you to answer the same question, but I want to throw you a little bit of a curveball because of the fact that you're in the US and there's Reg A going on and there's Reg CF going on. So incorporate some of that into your answer, if you would.
Sure. As we talk to a lot of companies in terms of listing, it really comes down to, what their objectives are. And usually our two primary objectives as a small cap company are raising capital and trying to find that shareholder base. So in terms of, doing a dual listing or keeping a home listing, in my opinion, as a rule of thumb, if you're a Canadian-based company, your home listing, your number one listing should be your home listing. And if you're a U.S. company, your number one listing should be your U.S. listing. We're agnostic, with Canada and the CSC and the TSX. We have a great dual listing program in place with both markets. But I would say if you are a U.S. company and say you're in metals and mining, and there's a big network up in Canada that you want to, say, raise money through, it would be a benefit to any U.S. company to obtain a dual listing on the CSE or the TSX. Similarly, if you're a Canadian company looking to raise capital in the U.S., it would make sense to look at our market here on the OTC, whether QB or QX, or the exchanges. That's kind of the rule of thumb, and it really comes down to, I think, your target shareholder base and where you want to raise the money. Reg A and Reg CF, are new vehicles to raise capital. I've seen it used in Canada once for a company called TrueLeaf. That's on the CSE. That was good to see. We do expect to see a few more out of Canada in the coming, I'd say, months. But I think what we will see with the CSE more so than the TSX this year in the cannabis sector, I believe you'll see more U.S. companies look to the CSE for a listing as their primary, and then do, I think, a dual listing on our market on QB or QX. Reg CF still somewhat kind of new in my opinion. The limit there is around $1 million, so I don't see too many companies looking for an aftermarket with Reg CF as much just yet. I think it's too small. Reg A, we've seen a number of deals, I guess, go through last year. A number did go on to the exchanges. They have not done so well to date. I think there are a lot of opinions as to why they have not performed well. But that being said, it is a great vehicle. I'm seeing new deals filed for Reg A every day. I think we're going to figure it out. It's going to take a little bit of time, but if we get the right bankers, right investors, right valuations involved, I think we'll all come together this year into next.
I want to now discuss the concept of the cross-listing and, where a company would list on more than one exchange. So I'll state the obvious. There's probably more liquidity being listed on more than one exchange. I mean, there seems to be some reference to U.S. investors having an easier time of buying stocks that are U.S. listed and vice versa. And so let's talk that through a little bit. Brady, why don't you start off with that?
Sure. So I think, also to expand on Joe's comment a little bit here, the real benefit of dual listing is having access to that pool of capital that knows your business best. And when you're thinking about the mining financings, half of every mining financing that happens globally happens on either the TSX or the TSX Venture. It means 50 cents of every dollar that goes into a mining company happens on one of our two exchanges. So that means that, if you're a U.S. mining company, you need to figure out how to play in that pool of capital. Similarly, if you're a technology company in Canada, you need to be figuring out how do I plug into the U.S. pools of capital that understand my business better and pay a higher premium than what the traditional conservative Canadian investor might pay. Those are all things that are company life cycle discussions, figuring out, can you get up and get listed and grow and then dual list yourself in London, down in the U.S., Australia, if that makes sense for you. And when you start thinking about, what actually starts to make sense for the dual listing side of things, I think it is a question of where do you want to get that access to capital. From a U.S. piece, we have found that, having that OTC dual listing does mean that your stock quote will show up on more brokerage screens in the U.S. than without it. Similarly, if you've got NASDAQ or NYSE, it makes it even that much more prevalent. There is an additional liquidity that comes with that. Today, if you go to any broker, though, and you ask to trade a venture-listed name, if you have the stock quote and you know what that ticker symbol is, they can facilitate that trade. Sometimes there's a little premium associated to it, but pretty much every single broker in the U.S. has the clearing relationships. We have a partnership between CDS and DTC that allow for that. So there is an ability for U.S. capital to trade on any of our names today.
Joe.
Yeah, so we've seen kind of a compounding effect. Any exposure is good exposure, and as you make any security more accessible, being in Canada and also being in the U.S., you see, a compounding effect to valuation and liquidity. So it's really a cool thing. The benefit, we have at OTC over NASDAQ or New York on the dual listing side is that companies that do a dual listing do not have to become SEC registered. So there's no 20F or 40F involved in obtaining a QX or QB listing. That can save even small companies, roughly $500,000 per year. Or more. I know Chronos selected to, kind of go on the NASDAQ route and kind of bypass the QX, QB route. But again, we have over 350 dual listings on our market. It's been a great, cost-saving alternative to then looking at a NASDAQ or New York listing. We signed a partnership this year with the CSE. It's been great for us. We've got a lot of momentum going both ways, and I think it's helped us out both. So what I would say is, again, any exposure is good exposure, and the more you make your stock accessible, the better off you're going to be.
Yeah, and I might add that the Canadian and the American markets are more integrated than any other two markets in the world. It's the only situation that I know of where you can actually finance in one country and trade in both of them. Too often, you'll get dual listings from different parts of the world, and if there isn't really a supply of stock in both markets, it's probably only going to trade in one of them, right? But between Canada and the U.S., there's a lot of arbitrageurs, that trade across the border tend to keep the markets in line. The price difference would just represent the difference in the exchange rate. So it's a very effective way of accessing U.S. or Canadian investors, depending on which side of the border you come from. And I think for the investor, the principal advantage is it does facilitate, as Brady mentioned, there is a premium for trading in the other country because the brokerage relationships across the border. So it is a bit easier to trade in your home country, and it's cheaper.
The next question is, what sectors and kinds of companies are currently listing? Now, we all know from our experience in the market that trends tend to shape what's going public and what's getting listed. So if I say things like blockchain, cannabis, technology, fintech, artificial intelligence, is that the trend? Is that what you're seeing? And explain if you would. Joe, why don't you start with that?
So, as a market, we're very agnostic. I think, for this panel here, for the most part, the past year, we've seen a big influx, I would say, in metals and mining companies onto our market for the most part. Cannabis, is a very hot sector, blockchain as well. At the same time, as it is hot, you're seeing also a pretty big crackdown by FINRA and the SEC on both blockchain and cannabis. So I would say, yes, we're seeing a lot of traction in those two areas, but both good and bad. One thing, we do like to see, and, we are getting help, is on from FINRA and the SEC, especially on the blockchain ICO front. And that's good for the market. So again, as good as these things are for the growth of, say, new sectors coming out, it's also important to recognize that there does need to be control, and we're also, as a market, trying to help out with the SEC and FINRA on that control. But again, overall, we are a very agnostic market.
Rob?
Yeah, I would say the same thing. Philosophically, we've always let the market decide which companies get to go public, which companies get to be financed. When you mentioned ICOs, our approach is, well, it's going to be a security. If you're going to clear a prospectus, then we can list it. But if it's not, if it's a cryptocurrency and it hasn't been cleared by a prospectus, then no, it's not going to be listed on our exchange and probably on any other stock exchange. That said, a lot of companies are going into blockchain. A couple of years ago, we put a list of cannabis stocks onto our website just because people were asking for it. And the cannabis sector kind of spans different sectors, whether it's technology or life sciences or something else, depending on what end of the business they're in. And then last fall, we were seeing an awful lot of companies getting into blockchain, and I thought, well, maybe we should look at putting a blockchain list up, because we probably got a dozen companies, and this was in November. We probably got a dozen companies that got into blockchain. And so we went through the list, and then we found out, no, it's 24. So, yeah, and some of them actually have a blockchain. So it's kind of interesting. All of them had a press release that said, we're in blockchain.
That's another topic.
Right.
Brady, take it.
Yeah, so not trying to be supportive of everybody here, but the agnostic nature of our markets and the fact that we have 1,654 listed companies that are roughly half in mining, 20% in technology, 20% in life sciences, and then another chunk that's in real estate, financial services, and diversified industries. And the capital formation that goes on, we had 1,500 transactions last year. We did $2.3 billion in the first quarter of this year of financing activity for those companies listed with us. And it's that agnostic nature that's integral to the success of our markets. And we think back to, I know it's a dirty name, but you think back to BRIEX and kind of what happened when there was fraudulent disclosure. That's what led to the 43101 standard, which has now been globally adopted as the mining resource standard and mining disclosure standard. That was because the Canadian capital markets recognized an opportunity in junior gold mining to put money to work quickly, to drill some drill holes, come back with results, raise money at a sequentially higher valuation, then put more money to work and continue to expand on that opportunity. We've now done that for junior mining companies in the gold and precious metals. We did it for battery technology companies recently. So you look at nickel, you look at lithium, you look at cobalt, you look at copper. I mean, it's 4 times as much copper in an electric vehicle as it is in a traditional vehicle. So that demand is just going to continue to accelerate on the mining side of things, which I think is what drives some of the mining activity Joe was talking about. We have to be able to apply those same processes when we get to blockchain and we get to marijuana and we get to AI. And for us on the venture side, if you're just putting out a press release saying we're getting into marijuana or we're evaluating blockchain strategies, that's not good enough for us. Like we actually require those companies to have a legitimate operating business to be able to demonstrate that that management team has some expertise. And that's why the global pools of capital trade on our market. 40% of our daily trading activity comes from outside of Canada. 25% of the member firms that are active with us include internationally registered banks. 25% of them are headquartered outside of Canada. So it's those global pools of capital that we bring to bear on the venture stage companies that are listed with us, and it is because we have that higher compliance and that higher standard of listing.
Let me ask the next question, and everything sounds really positive and great, and things are moving, obviously. Some of you out there I haven't seen since 2,000 Dow points ago. It's been a pretty good market out there. Are your listings increasing or decreasing? And I want to know why, either way. So why don't you start, Brady?
Sure. So first time since 2011 that we've seen a net increase in listings. And I think that a big part of that is we're seeing technology companies, life science companies, and not just crypto, not just marijuana, but companies like Nubeva out of California that have software as a service for the health space, Relic Health, recognizing the benefits of being able to do a reverse takeover and list the company on our markets in a very efficient manner. This is a tool that the mining companies have used for decades. They'd get out, they'd stake a property, drill some drill holes, find out if there's gold or not. If there's no gold, then management retrenches, goes back and tries to find another property that they can issue shares to acquire that asset and vend it in so that you then have a newly listed public company and trying something else. We've had successes like Rox Gold, which did that 6 times over the course of 30 years before it actually turned into a mine in Burkina Faso and graduated to the TSX, raising $300 million to do that. And we're starting to see technology companies recognize that same tool and that same framework for being able to list early, to be able to access capital to grow. And that's what's actually driving the growth in listings on our market, in addition to the momentum behind some hot sectors.
Let me stick with you for a minute.
Love to.
How has the growth of project generators affected the new listings in the resource market?
Sure. So we had, last year there were 37 CPC IPOs, Shelly. And so a CPC, for those of you not familiar with the program, is like a mini SPAC. It's called a capital pool company, and it differentiates that at the time of that management team finding a qualifying transaction or an asset that they're looking to vend in, the shareholders don't get to vote against it. Effectively, that pool of capital is up to $5 million, sits there and trades on our markets, looking for some qualified business that they can issue shares to acquire. And we had 37 of those listed last year. Throughout the course of the history of that program, we've had almost 2,800 of them, and 80% of them have successfully completed their RTOs or their qualifying transactions. And so it's been incredibly powerful for us. Most of that has been in the mining space, but we're starting to see technology guys, including the likes of Hamid Shabazi and Manny Pata, Jeff Booth. I mean, those are the guys behind TIO Networks that sold to PayPal, behind Build Direct, and one of Canada's Angel Investors of the Year, sequentially year over year, are all putting together CPCs now, which does show the demand for that in the diversified space.
Now, Joe, let me throw that same question to you, but I'm going to throw a little bit of an addendum to it. I'm sure that as you're going to answer that question, there's obviously natural growth in the dual listing aspect. But what I'm kind of looking at is what's the new U.S. listings or maybe IPOs or some other form of reverse merger of some kind. Let's see if you can go into that a little bit.
Yeah, sure. I mean, The listing business is very difficult. Before OTC markets, I was with Amex for a number of years. And even there, it was a difficult business. Those that have followed the BAT story, the IEX story, they're trying or tried to launch their own listings business. It's not easy. That I can tell you. So on the international side, yeah, we're doing great. We had over 100 cross listings last year from TSX and CSE alone, and we expect to outpace that this year. On the U.S. market, we do expect the growth to come from Reg A, we believe. I haven't seen as many reverse mergers as I did in years past. With Reg A where it is now, they may come back. We'll see what happens. But one thing that we're trying to do, or we've done last year, is we're targeting a lot of NASDAQ and New York Stock Exchange listed companies that are more or less orphaned. There are many companies on the exchanges that trade roughly 10,000 shares, 20,000 shares per day, and they're not getting the value of a NASDAQ listing. It's very costly to list on a national exchange. It's in well into the six figures, and for a small public company, that's a big nut. And what we've been trying to do is create a market just as good at a fraction of the cost. Last year we had roughly, I think it was 9 or 10 voluntary switches from NASDAQ. We had never gotten that before. So in terms of us as a market and kind of where we're going with our blue sky and our regulation and everything else, we're doing really well. And I would say on the U.S. market, we're really trying to capitalize on the orphan companies on the exchanges. I think that and Reg A and potentially new reverse mergers will be our growth this year.
Rob, you have the question.
Oh, do I?
Yes.
I'm supposed to have the answer. You have the questions. So,
Yeah, we get a wide variety of companies too. We're similar in terms of our demographics to the TSX Venture Exchange. I'd say we have fewer that are in mining exploration, but we do have several, probably a third of our stocks are in mining exploration. We've got a lot that are in technology, and then we've got just about everything else that you can name. So the reason the companies go public is to get access to capital. It's when you've got exchanges like ours, you can go public at a fairly early stage of development. You may be able to avoid the VC route and give your investors liquidity. We require a company to have 150 public shareholders with freely tradable shares. There's a lot of alternatives to going public. There is the IPO. There is the reverse takeover or reverse merger, if you will. And then we've seen companies that have reached enough shareholders as a private company. They've had over 200 shareholders while they remain public. They can file a non-offering prospectus, which is cheaper than an offering prospectus. And then they can, if the shares are then freely tradable, and usually they are at that point because there's only a 4-month hold period in Canada, then they can get listed at that point. We've also seen companies use a crowdfunding round to expand their shareholder base.
Now, one important factor that I always look at on these exchanges is, are market caps for these micro-cap companies increasing or decreasing? And I think, quite frankly, that's also an indicator of the liquidity in the markets. So let's briefly answer that each. Okay,
the answer is yes.
the answer is yes.
Yeah,
they
Joe?
I'd say it depends.
Okay.
So it's a tough calculation. What drives any valuation? There are a lot of different variables to it. One being, supply and demand and how a company would tell its story. One thing we've tried to work on a lot at OTC, the past 2 years is blue sky. So before I joined OTC, there was no blue sky coverage in the U.S. Now on the QX market, we have 30 states. And what that does is allows for brokers to kind of retell a company's story legally. Years ago, a broker could not do that. So in terms of where we're seeing liquidity in market caps, we're seeing more liquidity enter the U.S. market. It's been through our blue sky efforts. It's been through trying to help companies tell their story better. It's through companies doing their own part, and being at investor conferences like this today. It's at hiring the right investor relations firms. There are a lot of things you can do, but I would say if a company's doing all the right things, it will see its valuation move to where it believes it should be.
Brady?
Just in the simplistic answer, $55 billion of aggregate market cap on the venture exchange, which is the all-time high it's ever had. So, and that's in the context of us us being at probably half as many companies listed as during the mining heyday of 2007. So, yeah, market caps are increasing.
Now, I'd like to open it up to questions from the audience. Yes, sir.
So, first question for Joe at OTC Markets.
Okay, let me repeat the question for those that didn't hear it. On the homepage of the website is a section having to do with shareholders, whether they're retail, institutional. The question is, what can someone glean from that information? Is that correct?
Close enough.
Yeah. So we've taken the position, of OTC that we're not really in the merit review business, we're more in the information distribution, business. And so one thing we've been doing, as you probably have seen, is we require companies to verify a lot more information these days than we did years ago. You may see now a shell flag notification on our website. You may see a promotion flag as well on our website. But to answer your question on the shareholders, it comes from their record shareholders, which comes from their transfer agent report. So that number you see does not include beneficial shareholders. To get that number, you'd have to get a no objection list, I think, from, Broadridge you would be. But most 10Ks, 10Qs, 10Ks and proxies will only show, in the US for SEC filing, will only show the record number of holders, which, to be honest, is not really truly indicative of the entire shareholder base. We're in discussions to expand that right out more to better the information flow to allow for you to make better decisions. That's where the number comes from.
So let me add a little bit to your question. Does that mean it's the shareholders of record and street name? Right? That's kind of what you want to know?
That's right.
Correct. Yeah, it does not. That number is not indicative of that.
Okay. Yes, sir.
I have a question.
I'll repeat it.
Yeah.
How are new laws, new rules, new information coming down affect cannabis listings on the OTC and also on the other exchanges?
And most importantly, being able to register the shares with a broker-dealer so that you can, liquidate your investment.
And registering the shares with a broker-dealer?
Yeah, so I would say for a new public company to market, companies must go through a FINRA 15C211 process. For cannabis companies that have seen a slowdown there in that area, I wouldn't say it's cut off, but it is being reviewed, I think, more closely than it was, many months ago. As far as stock deposits go, my recommendation would be companies that you are working with in cannabis, make sure they're on the QB or QX levels at OTC. Many broker-dealers have, protocols in place for OTC stocks. If those companies are on the pink level, there will be some issues. But if you're on the higher levels of the market, typically those issues tend to go away.
I know this is an interesting topic because we at TMX Group have elected not to list any U.S. marijuana companies at this point. And it does go back to that agnostic nature of our business and the fact that, between the two markets, we have 3,200 companies representing over $3 trillion in asset. And the biggest thing we can be doing is trying to make sure that they have better access to those pools of capital and institutional capital from the U.S., from international sources. And if the first conversation that we're having as we come down to negotiate blue sky or figure out other things is you're knowingly acting in contempt of federal law, it makes it very difficult for us to streamline that process. So for us, what we've done is we have stayed within jurisdictions that have legal operations. We have over 30 companies listed with us representing $20 billion in assets. It includes the likes of Canopy, Canada's largest marijuana company today, which did start out as a CPC with us and grow up on the venture before graduating to TSX. I mentioned Kronos, which is now dual listed on NASDAQ. And that is, when it comes down to the international partners who elect to trade with us, that's why we've taken this stance to date. We're looking for that clarity out of the U.S. government.
Yeah, somebody mentioned the repeal of the Cole Memorandum, and that created a bit of a pause in the capital markets in Canada on listing of companies with cannabis assets in the United States. But that was more or less relieved when the Canadian Securities Commissions, and we have one in every province, but they act in unison as often as they can. And they published a notice that said, if you have cannabis assets in the United States, this is the kind of disclosure that you're going to have to provide to investors before you could sell securities here. So there still is a fairly healthy appetite for companies that are in that sector. I've also been told that when it comes to depositing securities, it's easiest to be done with a self-clearing firm in the United States. There are also some opportunities to get an account opened with a Canadian dealer, but it's not very frequently done.
Okay, let's see. Yes, sir.
Yeah, so,
Joe, let me repeat that.
Okay.
Has the OTC markets become a market maker?
the answer is no. We're not currently a market maker. We cannot make markets in stocks that trade on our platform. What we did do, though, however, is a few months ago, we filed a rule proposal with FINRA. And that was to kind of take over or change the FINRA 15C211 process. So in summary, what our hope is going forward would be we want the ability to file 15C211s. As of now, only a market maker can do it. We cannot do it. But to improve that process, we are trying to take that position over.
And the second question for the Canadian exchanges, is it possible today for a U.S. investor, a qualified U.S. investor, to make an investment in a Canadian cannabis private placement and have the ability to deposit those shares in Canada as a U.S. individual?
Well, that may be a legal question, but if you want to take it.
Alex? What's your answer?
Alex? Okay. I can't repeat the whole thing because I don't remember exactly what he said. But it has, go ahead, repeat the question.
You're right.
U.S. investors invest in private placements in Canada and have the ability to leave those securities in Canada and trade them in Canada.
The answer is yes. So speaking to that person gets well,
Right.
Come on, Alex.
Alex
This is-
Cormick is a Canadian lawyer who's got a lot of experience and expertise. Her answer was yes. That was going to be
Inquiring
mine,
minds.
but
I rely on lawyers to keep me out of stripes.
Take it.
So we just finished doing one that was on the CSE. So we did a Reg A for a company called True Leaf Medicine International Ltd. that was listed on the CSE. We did $14 million in total, $10 million in the U.S. under Reg A, $4 million in Canada. The CSE made huge accommodations in terms of people went crazy for it, to be honest with you. We had to return $22 million that we couldn't pick up. The stock started racing, and it didn't stop. So once we got that Reg A qualified, the market itself in Canada started moving up, and we couldn't reprice. We were hoping to increase that offering with the SEC, but we wouldn't be able to. It wasn't fair to the public market that was now repricing that. But the CSE did do a lot of accommodation in terms of, it took a lot longer for them to clear, so it was done by Bosted Securities and flash funders up in terms of broker-dealers backing that, so I want to make sure that they're recognized for their efforts. But they had to do KYC, know your client, suitability, and all that, and that process took a lot longer just because there was such a large appetite for it. Have they had problems selling their securities? No, they haven't. So one of the things that True Leaf did is that they made sure that they were OTC QB'd as we were going through that process, because both exchanges have a good relationship with the QB markets and also with the Blue Sky. The Blue Sky portion is really important. So with the disappearance of Standard and Poor, the OTCB has taken upon themselves to make themselves recognized by each state regulator as a Blue Sky. How many states are you up to now? So they're up to 30 states. The TSX and TSX Venture Exchange is recognized alone without kind of the QB component or the OTC component, is also recognized already in a number of different states. They've had that for a while. It's not as much coverage as I wish it would be. I think both the CSE and the TSX Venture would like to see more recognition from state regulators, because all of the companies in Canada have the equivalency of what a Blue Sky or a manual would require or more. So that's your answer. There's no problem. We're doing one now where we've, I think, taken it's a cannabis company. It's a private company, plans on listing. It's a Canadian company, 100% Canadian. And, but the U.S. investors, we've probably got about 500,000. Okay.
And by the way, I'm known for giving formal introductions. Simeon, Alex, Simeon. You know, part of what I want to say to the audience is many of you listen to SNN podcasts, and with Bobby Kraft, the Planet MicroCap podcast. Many of you read the MicroCap Review magazine. Brady's podcast was a very popular one, wasn't it, Brady? So thank you for checking in with us on Stock News Now, on the Planet MicroCap podcast, and reading the MicroCap Review. And I want to thank these three gentlemen who, I'm always in constant contact with these guys. They're in the magazine and writing articles and advertising, et cetera. So from the bottom of my heart, thank you for coming to Las Vegas, and thank you all for coming to this panel.
Thanks for having us.